right, welcome into Market Day Report. I am Scott Shellady, otherwise known as the Cow Guy, and it's shift change. You got me now for the rest of the show. The back half is all mine. Hopefully, you'll be there with me. Let's take a look at these prices and where we're going to get started here halfway through the trading day. Let's take a look at corn. If I click on corn, that would help. That's what you get for being rusty, not being in yesterday. I was down in Austin, Texas, talking to some good people. Corn is down 3 1/4 cents. This is it's bled a little easier from the radio show. March is at 6.81 3/4. May is down 3 cents to 6.79 3/4. Dees, the new crop, down 2 cents, 6.01 3/4 is last there. But the good news is we're over that $6 mark. Let's take a look at soybeans. Soybeans are lower to 18 1/4 cents in the front. March, that's 15.21 last. That's about 3/4 cent off the lows, folks. So plumbing the depths right now, 17.5 cents lower in the May to 15.20 even. Let's take a look and see what we've got going on in new crop. These are new crop Novi beans, Nov 23, 16 cents lower there to 13.77 1/4. All right, let's take a look at wheat. What's happening in the Chicago wheat market? That'd be good to see. Wheat is down 6.5 cents as well. That March contract at 7.45 1/4 last, penny and a quarter off the lows. May is down 6 cents to 7.53. How about the hard red wheat in Kansas City, the old HRW down in KC? 4.5 cents lower in the March, 8.51 1/4, 2 cents off the lows there. May's down 4.5 cents as well to 8.44 3/4, and that's about a penny and a bit off the lows, not even. So we'll keep an eye on all that stuff. It's really kind of trading heavy as we speak right now. Spring wheat in Minneapolis, that's going to be down 6 3/4 cents to 9.09 1/4. May's down 5.5 cents. To 9.05 3/4. Then finally, let's get to this cotton market and see what we've got going on over there. But it's not bad, up 201 points in the March, and May, by the way. 84.83 is last in the March contract, 201 points higher. These prices brought to us by Bar Chart, and the content's going to be brought to us by Riley Schwieger from CHS. Riley, thanks for being on the show. I've just listed off a lot of the row crops. What do you have on your plate here in store for us today?
Yeah, well, on the energy side, the rally continues here. We've got crude and gas have closed higher for 6 consecutive sessions. Diesel did lose its streak yesterday, but it is in the complex higher. Really, the story it's this week, and it has been last week too, is China. We saw some, I would say, relatively gloomy data for 2022 from them this week, but really, I think we're sticking to more of a forward-looking idea here and looking for demand recovery. They have their Lunar New Year holiday that's starting here this week through the end of the month, and the expectations are for a pretty significant uptick in demand. They've been exporting a lot of fuel recently, increasing export quotas. The thought is that some of this increase in demand could swallow up some of those exports, and we might see a little bit less of that here in the global market. OPEC and the IEA, which is a Paris-based agency, released their monthly reports here this week. OPEC did leave their demand growth unchanged at 2.2 million barrels per day for 23, but the IEA did increase their 2023 demand forecast by 200,000 barrels per day to 1.9 million barrels per day. Both groups have made at least some sort of revisions higher over the last couple months, and both have cited China and demand recovery as a significant driver there. Macros, outside markets also coming into play. We saw inflation decline last week, and we also saw producer price index today coming in below estimates. Obviously, if this acceleration continues, do we see, or does that influence the Fed and how they keep approaching this tightening? The result of that, we've seen the U.S. dollar slip to 7 and 8 month lows. It is off its lows today, but obviously, and how that impacts commodities and energy. Could see non-dollar currency holders seeing a cheaper price for some of our products here. If that causes us to possibly export more crude or refined products, we could see that pressure our domestic inventories here. Speaking of inventories, EIA stats, we won't be seeing that today with the holiday on Monday. That will be reported a day later, so we'll be looking at that tomorrow. Obviously, we saw a pretty historic build in crude. So we'll see if we get the pullback that some of the polls are predicting there. So that's why I'll stop there.
Well, you covered so much, you're going to put me out of work there, Riley, so you got to stop it, all right? Let me talk about something. But I appreciate you coming on. Riley Schwieger, he's with CHS. We're going to go away. We're going to pay some bills. We're going to come back and talk livestock with me after this.